Welcome, everyone, to the Vested Interest channel. This is Shane, and I am back after about a week off from going up north deer hunting over by my dad's and with a buddy of mine. I am back. This is our weekly portfolio update. The portfolio does sit at $444,888. We did add $990 in new capital to the portfolio, even though we were on vacation. I am always in the market. So we're going to recap everything that was going on in my portfolio this week, and let's just get right into it. Now, no options for the week, so we're just going to skip over that. But before we get much further into the video, if you could hit all of those buttons down below, it really does help out the channel. It helps to grow with that YouTube algorithm, helps to spread the videos a little bit longer. And watch the videos to the end. That would really help as well. Share with anyone you think that might find value in the content. And again, all of those buttons down below. Now, dividends, we did get some dividends even on vacation. They continue to roll in. Enterprise Product Partners paid us $279.54 from the shares that we already own, and we do have the DRIP set, stands for Dividend Reinvestment Plan. Now, that just means that anytime dividends are paid out by any position in the portfolio, those funds automatically get reinvested into that same position. So in this case, Enterprise Product Partners pays us $279.54. That $279.54 goes right back in and picks up more of ticker EPD out of the energy sector, 8.76095 more shares. Those 8.76095 shares add an additional $19.09 in passive income over the next calendar year. And this is the dividend snowball in effect. Right? We already have bought or purchased shares of Enterprise Product Partners. Those shares pay us dividends. Those dividends get reinvested. Those reinvested dividends add additional passive income, and we'll buy more shares the next time it pays out. And that dividend snowball continues to roll down the hill of time and grow and grow and grow until eventually the overall portfolio will be able to pay all of my bills, and then I can retire and be out of the rat race. That is the overall financial goal for this portfolio. All right, now we get into the new capital invested. We broke it down between 2 days. Early in the week on November 10th, I think that was Monday, if I remember correctly, we did add $647.45 in new capital. And with those funds, we picked up 2 more shares of Pfizer, ticker PFE, out of the healthcare sector at $24.64 per share. Added to our Occidental Petroleum position, ticker OXY, out of the energy sector, 3 more shares there at $40.96. 4 more shares of Vici Properties, ticker VICI. This is a REIT out of the real estate sector. 4 shares at $30.25. I like this one under 32. I'm going to continue to buy it so long as it's under there. Procter & Gamble, we continue to buy this one under 150, ticker PG, 1 share at 145.66. Procter & Gamble is out of the consumer staple sector. And last but certainly not least, on the 10th, we bought 2 more shares of Owens Corning, ticker OC. Those 2 shares we picked up at $104.32 per share. This $647.45, the new shares purchased with those funds, added $23.26 in additional passive income over the next calendar year. We weren't done. We went back into the portfolio and added $343.52 on Friday the 14th. And with those funds, we bought 1 more share of Vici Properties, $30.33 for that one. That is, again, a REIT out of the real estate sector. And the next 2 are our weekly ETF purchases. VTI is not on this list. We haven't purchased that in a couple weeks. That one we're going to be more selective on. These 2 will be our continuous purchases every single week, regardless of the market, for at least the next calendar year. I'm going to keep VXUS and SCHD, Schwab Strategic Dividend Growth ETF, and Vanguard's International ETF here. VXUS will be our continual buys unless something changes in the market. Again, if VTI makes a big pullback, 5, 10, 15% or more, then I will add to that one as well. But right now, SCHD and VXUS. And with that said, 6 more shares added to our SCHD position. Again, that Schwab Strategic Dividend Growth ETF, $27.25 per share on that one. And Vanguard's International ETF. This is the total stock market outside the U.S. here. That's why it's ex-U.S. 2 shares at $74.85. Now, the new shares picked up from this $343.52. We added $10.91 in passive income over the next calendar year. Total invested $990.97. Total passive income added, new funds as well as the dividends paid out by Enterprise Product Partners came out to $53.26 in passive income added over the next calendar year. Quick run through the sector weights here. Communications makes up 8.51% of the portfolio. Consumer discretionary at 2.67%. Consumer staples at 7.64%. Energy makes up 9.07%. Financials at 6.66%. Healthcare makes up 16.72%. It has slipped into second place. Industrials at 5.33%. Number one overall in the portfolio is technology at 17.7% of the overall portfolio. Materials at 2.64%. Utilities makes up 3.87% of the pie. REITs in real estate at 5.62%, and ETFs, which eventually will be the largest slice of the pie, at 13.55%. It's already in third place there, again with information technology leading the way, healthcare right behind, and then the ETFs. Over here to the right, you can see the same percentages that match up to the pie here, as well as the dollar amount allocated to each sector as well. And here it is, what I think most of you come for, the overall portfolio update. I do show this every single week, the ups and downs associated with the real portfolio. I think it's important for those of you out here watching this space, actually being able to see what those of us in this space are talking about, and that it's not just talk, that we are in the market with you. We are truly investing. So I want you to see my portfolio. I know this is just a spreadsheet, but it's based on my real portfolio. I updated this today on Sunday. Typically I update it Saturday afternoons, but I was on vacation. I took a week off to go do some deer hunting. I did get a 7-point, if I didn't mention that, so I did have some success. Missed one before that actually, so 50-50 really. But it was a good time. But back to the portfolio update. I do want you to see a real portfolio built out over time, so you do understand that I am in the market with you. I am investing every single week out of the additional income that I have, putting as much as I can, as fast as I can, to eventually reach financial freedom. Whenever this portfolio is able to pay the bills that I want it to pay, that is whenever I am kind of able to step back away from the rat race. That is the goal of this portfolio and overall mission here on this channel, to eventually reach financial freedom. Hopefully that is your goal and that's what you're striving for. And for those of you who maybe are thinking about doing your own investing or starting an investing journey, hopefully this helps out. That's why I show this. So in this column, and I do have this is not a spreadsheet that I made. This is Ryan Williams made this. Ryan, I think it's Ryan Williams made this spreadsheet. I've tweaked it a little bit and added some additional things like the portfolio salary and some other columns like the 15% of a 52-week low and some other stuff to it that I think is important, highlighting the shares whenever they update, that sort of thing. And then if you want a copy of this, I can certainly link it down below if you're interested. This ticker here is where all the different positions, the tickers, symbols for each position are in this column. Total shares, all of these numbers will be as of the close of business on Friday. The update, again, was done today, Sunday, around 2 to 3 p.m. Current price, again, as of the close of business on Friday. Market value, average cost per share. This does include reinvested dividends. Same thing with purchase price, does include reinvested dividends. Total return, whether I'm up or down, I want you to see a real portfolio built out over time. So I'm going to show you the ups and downs associated with that. Individual positions go up and down. ETFs do the same thing. So it's important to understand, just because you may be seeing red in a position does not necessarily mean you should scramble to go sell it because all of a sudden it's a bad business or a bad position to hold. If the fundamentals of the company haven't changed, whenever those pullbacks happen, those are the times you should be doubling down, maybe investing a little bit more, and then hopefully getting that return later on. But obviously, if the fundamentals of the business have changed, it may be time to cut bait and go switch to another position or into an existing position. Percent return here, again, I'm going to show you whether I'm up or down. Biggest winners right now, let's see, still Lam Research at 102.79%. Google right there behind them, 75.4%. OHI 49% return. AT&T still up there, 46.98. Then we've got some others, 17.33 on UNH. That one's pulled back recently again. VTI, we're up 16.9%. EPD, Enterprise Product Partners, that just paid us a dividend, up 16%. Enbridge up 27%. You can read through the rest. Which sector each position falls in, whether they're quarterly, monthly, semi-annual payers. Don't have any monthly payers right now. The columns highlighted in yellow are the positions that have raised their dividend for the year already. I wanted to highlight that for you. LenB looking like they might not be raising their dividend. That's a disappointment to me because this is actually a recent addition to the portfolio this year. AT&T I bought knowing they weren't raising their dividend. They had just cut it So that one I knew they probably weren't going to raise it, and they had some financial issues they were trying to work through. OHI, they were not raising their dividend whenever I bought them, but I locked in such a high yield on cost. I'm all right with that one. I would like them to start raising that dividend, even if it was small like Verizon does at 1%, 1.8%, somewhere in there. But we'll see if they do that. All right, current yield in this column, my yield on cost here, portfolio weighting. I do have a bit of a rule in the portfolio. I do not want any one position to be more than 10% of the portfolio. I do not want any one sector to be more than 20, 25% of the portfolio. And just because a position or a sector does reach those numbers, it doesn't mean I am selling them. It just means I wouldn't be adding to them. Estimated annual income here for each position, as well as totals at the bottom. Dividend growth year over year. I do adjust this as they adjust their dividends year over year. Payout months here, 15% of a 52-week low. I use this column. I want my average cost per share to be at or lower than 15% of a 52-week low. So that's how I use this column. All right, total shares, 7,160.244 shares. Market value at $444,888.59. My purchase price, what I have into it, including reinvested dividends, $373,883.96. Total return, I am up $71,004.63. Or 18.99%. I do not focus on this. Total return is very nice to see. Obviously, I want my portfolio to go up, but unless I sell all these positions, I do not lock in this return. And whenever I do, if I do that, I am going to have a taxable event where I would not get this total return. I have to pay the taxes on it. Okay, so that's why I'm a dividend growth investor. I want the dividends to grow over time, and I want the income from the portfolio eventually to pay my bills. So nice to see, but I don't plan on in the future selling all my positions and moving them into a dividend position. That's some people do that, which is fine if that's your goal and what you're looking to do. I'm just looking to do it all in once. I'll grow out a dividend growth portfolio, let it grow over time, and eventually it will pay my bills. That's just going to happen. Which sector each position falls in here? Let's go over the portfolio. I've already talked about that. Portfolio salary per month, currently at $1,113.63. Per week, the portfolio is generating $256.99. Per day, $36.61, and per hour up to $1.53. I think it's illegal to pay under minimum wage, so I need to really have a talk to my portfolio manager. That probably is a lame joke. But anyways, current yield in this column, 3.004. My yield on cost at 3.574. And this is what I'm focused on. That's why it is circled over here in red. The dividends paid out by all the different positions in the portfolio, and it continues to grow as I add new capital, as the positions in the portfolio pay out dividends and they get reinvested, and as the positions raise their dividends over time, currently sits at $13,363.58. And we are going to be very, very close to that goal of $14,000 by the end of the year. We'll see if we make it. It's going to be very, very close. Dividend growth currently at 5.33%. And again, this does adjust as the positions in the portfolio adjust their dividends, and we'll just see what it averages out to there over time. All right, that is really it for this one. Again, this one was coming out to you a little late because I am just getting back from vacation. This is one of the first things I did after I took a shower and unpacked my bags. Hopefully your portfolios are doing well. Let me know what you added to in your positions this week. Did you receive any dividends? Where you were, any options? Would love to hear from you in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think. Share the videos with anyone you think they might find value in the content. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics, so drop them down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. Hey, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing, educational, and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.